There's an important, reform measure that everybody is watching out for, which is the GST, which has been passed by the Lok Sabha, and Hina's got more details there.
Well, absolutely. Finally, the first hurdle has already been crossed, which is the Lok Sabha. Now we are hoping it to go to Rajya Sabha tomorrow, and that's going to be the real litmus test as far as this government's reform agenda is concerned. Will GST see the light of the day, and will the implementation actually happen on 1st of April? And how does it look like in its current form? To discuss all this with us, we have right now Mr. Rajeev Dimri, leader Indirect Tax at BMR Associates. Thank you very much, Mr. Dimri, for speaking with us here on NDTV Profit. The first hurdle, though it was not being really considered as a hurdle because we know government has got numbers in Lok Sabha, so that has been now crossed. What's your assessment? Will the government be able to push for it in Rajya Sabha, and how do you look at it in its current form at this point in time?
Very loaded questions. Let's look at it one way, that in the last 10 years, this is the most progress that we made in the process of introduction of GST, because we've had a situation where the bill was introduced in the parliament, but this time it has been voted and it has been passed. While some people might say it was a foregone conclusion, but this still represents, reflects the will of the government to actually push through this. And for that in itself, we should welcome it. It may play out the way it might play out in Rajya Sabha, and let's hope that, main opposition party, Congress, had been supporting this bill and the concept of GST, and therefore if the parties are aligned, maybe it has a chance of going through. As I understand, they don't have philosophical difference with it. They just want it referred. So let's see how that will play out. But in terms of its broad structure, this has been under debate for many years, and therefore there are not too many things that are new, except a few things like this 1%, which a whole lot of debate is going on, and rightfully so. So I welcome this progress, and let's see next week what happens.
Exactly. So that will be an important thing to watch out for. But a lot is being talked about GST. It's going to be the biggest reform that the country is going to face, especially in the indirect space in particular. What's your assessment in terms of provisions which are there right now and the changes that have been made from 2011 to 2015 now? Is it going to be the game changer that the country is really looking forward to in 2015?
It's certainly the game changer. If we were to look at it, is it compatible with how GST works around the world? Certainly not. Is it the perfect GST that exists in the world? It is certainly not. And if you compare it with the sort of global standard, it certainly is far below that. But if you look at it from where is it in comparison to what structure we have today, I think it's a huge step forward, and it is a game changer. It is not just a new tax, it's a whole way of taxing, and it will create a new environment for business. It will hopefully ease doing business and reduce cost. So it is certainly something that is a game changer for sure.
Game changer for sure, but there are some concerns that have come through because, it is supposed to be one single tax on goods and services. It is supposed to take out the overlapping taxes and make it more simple.
Right.
But now some people say you have a GST at the central level and the GST at the state level. It's not going to help. There's again going to be nitpicking, corruption, nepotism, and it's not going to serve its purpose. What do you think?
If you compare it the way you started, that one tax all across, that's the global version of GST, and therefore if we compare it with that, certainly we are falling away short. But if you look at what it is today, we have excise, we have VAT, we have CST, we have service tax. If we compare from that, it's a huge step forward. All the issues of nitpicking, multiple agencies happens today, and therefore it is going to reduce that. So depending on what you're comparing, I guess half glass full or half empty, I'm looking at if it's a huge step forward from what we have today, that's what I'm happy about.
But some people are also talking about the revenue neutral rate. How do you think a consensus will be worked out there? And what will be the path ahead once the Parliament approves this? Then how will it be rolled out?
Okay, so revenue neutral rate, what was in the public domain of 27% is very high, and higher the rate, less chance of it being accepted by public, and therefore it's doomed, to begin with. And Yesterday we heard the minister say that that rate is too high. We are looking at a more moderate rate, and I think that's a great step forward again, because 27, high 20s is not workable. Low or 20 would be a fair way to start. From a state perspective, yes, no one size will fit all, and therefore no one rate can work for all states. But if the federal government has given a commitment of compensation for the next 5 years, I think states ought to be more open to taking a chance, because they have a underwriting of their revenue. So maybe that's a way forward to that. I can understand that states are a little bit concerned because there is no data available on what it would look like. But if you have somebody underwriting your potential losses, I think there should be a better ability to take a chance on that. In terms of rollout, what is in the process is only a constitutional amendment. A whole lot of legislations will have to come out. The whole lot of regulations will have to come out, the rules, the forms. So after this is done, there will have to be a major activity in terms of rules, regulations, and a whole lot of details have to emerge.
So once the Rajya Sabha clears it, there's going to be another lot of, in fact, things that we are going to see in terms of GST, which will be coming out.
Absolutely.
Two things that I want to talk to you about. One, you spoke about the compensation part. We heard some of the opposition members from the opposition states demanding that, compensation for five years is something which is less. To which the finance minister said that federalism is not about making states richer. It is about making states richer, but doesn't mean that center should become weak. So, now this demand of having a compensation for more than 5 years, is it justified according to you? And is the compensation being provided right now an adequate one according to you?
My personal view, a 5-year is in this process a very long time, because if a certain rate is not going to work, we always have the ability to change the rate. So if, let's assume for discussion purposes, that this gets introduced at 20%. And if that's not adequate, it can only be increased. It's not constitutionally written that it has to be 20%. To my mind, even 5 years is more than adequate. A 3-year would have been adequate. We're not talking about a 6 months or a 1-year compensation. A 5-year, to my mind, is absolutely fair to understand how the steady state of this will work. I think anything longer, at least in my mind, is not a justifiable process. So yes, there will be a lot of learning that all of us will have to do, the whole country has to do, but a 5-year, I think, is more than adequate.
More than sufficient as five-year compensation for you. Let's talk about another key issue, which was again the concern of many of the members, is that the view that manufacturing states are going to suffer and consuming states are going to benefit. When it comes to that 1% tax, which the finance minister yesterday explained that this is going to take care of the manufacturing states. What's your assessment and the kind of justification he gave to the 1% tax that the states may be allowed to levy?
See, at one level, I understand when it stays with the justification. Today, the 2% is collected if I produce in state A and I sell from state A, then the state A gets 2% from it. But state A does not get 2% on every movement that takes place. It is only on sale from that state. If the logic is to only protect that aspect, I think that is understandable. However, the concerns are the following, that this 2% may apply on every move, or 1% may apply on every movement, and that's where it goes far beyond the current tax, because movement can be for multiple reasons. I import in one state or produce in one state, then I may move the goods to another state and then redistribute the goods from there. Or if I'm a contractor, I may be moving machinery from one state to another. I can't be paying 1% on every movement of goods. That is one aspect. And the second aspect is that the Constitution bill says it's meant for 2 years. But there is an ability for the GST Council to extend the period. And it is that part that is making people nervous. So if it is meant to only protect that sale and for 2 years, I think a lot of people will simply accept it as a cost of this transition. But if it is something that can quickly creep into a longer period, or it will start applying to a base much wider than where it is applicable today, I think concerns are on those counts, not just on the 1%. Because if every movement is taxed for a goods industry, this could very quickly add up to a much sizable number. And it's a top line tax, so it could make a big impact.
Even that origin of supply was one of the key concerns as well, where the goods or services be emerging from and where it's going to be tagged.
It's not meant to apply on services, so services are out. But let's say if I'm a manufacturer, let's say any nationwide distribution company would have manufacturing in 1 or 2 locations. From there they move to a central warehouse and then to a regional warehouse and to a local warehouse. same goods before you and I consume it could move multiple times.
So that 1% is going to be levied in every state. What if they're going from one to the other?
That's the question. That's the fear, that if it is going to apply on every movement, then it's a huge cost.
It's not going to be 1%.
Then it's multiple. Exactly. So that's the concern. If it stays, and there was some statement that the minister made in the parliament yesterday that it is only meant to apply on manufacture, and that will depend on how the law develops. If it says from the point of manufacture, the first movement will have 1% and no more, that alone is all the goods move into the state, raw material moves into the state. So look at any manufacturing company. It procures goods from all over the country and from outside. It produces and then it moves. So it's 1% may apply multiple times. And that is the concern. So it is going beyond the original compensation, because we all know how that compensation works today. I produce in one state, I sell at 2%. That is the amount that I'm ready to give up, but nothing more than that.
But have you heard something about this from the government side, from anywhere, as to how exactly is this going to be, or still it remains a big concern or a big question right now?
A lot of debate is happening. I think the government understands, and the people who are drafting the laws or are looking at the policy understand the issue, but the concerns will be only addressed once we see the actual legislation as to what it is meant to apply on. Until then, it will remain a big fear, because the details are missing.
All right, Mr. Dimri, thank you very much for joining us here on NDTV Profit and explaining to our viewers so well as to what exactly is this GST all about and how exactly is this going to benefit the states as well as the centre. And we are slipping into a very short break at this point in time. Don't go anywhere. We'll touch base with the management of